Well, good morning and welcome to the Market Carver. Hey, I hope you've had an outstanding week. Obviously, our prayers go out for the people in Boston. What a sad, sad story to try to explain to our children and the people that are around us. At the same time, if you haven't had the opportunity to hear some of the phenomenal stories that have come out of Boston about how people have rallied together, I sure hope you're getting to hear part of that too. The number of people who listed their home addresses and phone numbers to invite people to come stay on a public website. The social media that was delivering the pizzas to people to try to get them things. The way our country comes together when it's under stress is truly phenomenal. That part is fun to watch amidst all of the other turmoil and challenges that come about. This is a big week for everybody. Obviously, April 15th came to an end. One of the toughest tax seasons that I have seen for my partners. The fiscal cliff delayed some of the forms that were coming out. We had tons of 1099 revisions, some the last weekend of the tax year. It was just a really, really challenging time. They don't get any more time, but they had delays in getting information. That made it really, really tough and challenging. Glad that we got through that part for them. Glad that all of us are through it. It is critical now that we have those tax returns in front of us that we do great tax planning for this year to make sure that we put ourselves in the best situation we can last year or next year. Remember, when we do planning, we want to talk about what our effective return was, our effective tax rate was for the year. And when we do planning concepts, when we add an individual thing, we want to pay attention to that marginal return. So as you come into the office and we sit down and we talk about those things, let's make sure that we're maximizing that brackets, whether it's in tax credits with 529s, Roth conversions, harvesting losses, using the gains for charitable gifting. Tons of things we can do. Let's just make sure that we're actually getting stuff done. Well, turning to the market, obviously Thursday night this week is the Thirdly meeting rather in Anderson. Hope you can make it if you're available. A couple weeks we have the one in Lafayette, and of course we'll put together one of these to send out to those of you who are out of state or just can't make it, to give you a background of what's going on. First, on the fundamental leg, obviously we have Alcoa reporting. It's always the lead company to kick off in the earnings, and it's very, very critical. When Alcoa beats earnings, 74% of the S&P 500 companies statistically tend to also beat earnings estimates. Alcoa did that. So that's showing us some good news inside of the market from a fundamental perspective. We've called this a segmented market for a long time. Clear winners, clear losers, and we're really seeing that as some of the individual companies begin to shake out. On a technical analysis, remember that's just managing that money flow. That bottom chart's the S&P 500, and you can see that it's clearly in an uptrend, even with the volatility. Lord knows we had that this week. Even in the volatility, you're still seeing that S&P 500 work its way up. We're able to use this as one of those four legs to say, okay, even though we don't like everything that's going on, even though some of it feels bad in the market, it's still working in a positive direction. Now, the top part of that chart is measuring relative strength, and all that it's telling us is, hey, when the market's having some volatility, it's not coming back as well under the hood as what we would like technically. It doesn't mean we're going to go into a ditch. It simply means that there's some air that's coming out of the tires, and we've got to pay attention to that as we move forward. Well, those of you who've been around me for a long time know my disdain for mutual funds. And not just because they were bad instruments. From 1924 to the day we created Excel, they were perfect, very, very necessary instruments, very well needed. I just don't think most people understand the fees and expenses and challenges that are inside of them. Well, Bill Sharpe, one of the ones who won the Nobel Prize, part of the creator of modern portfolio theory and in the way that it works in the prudent investor rule, came out with a wonderful report that shows as much as a third of your retirement could be eaten alive by fees and expenses, not the commissions, the fees and expenses that are inside of those mutual funds. It's a great report. And it's very, very accurate, and I've been saying it for a long time. I've never said a third of your retirement. That's dangerous to say. He's done it mathematically. I feel like it's accurate. It's just I've never been able to do the math to say that it's that significant. But those, when we talk about that fiduciary focus, the risk and volatility being one, fees and expenses being number two, taxes three, and making sure that we get a real return, something above zero plus inflation. Those four things are my fiduciary focus. That's the lens that we try to look at making all investment decisions and planning decisions through, is to make sure that we're managing all four of those. Obviously, it's not just the return that's going on. But if we can eliminate some of those fees and expenses, we can certainly control some of the drawdown impact that exists inside of our marketplace. Bad week for people who own gold. We're very, very fortunate. We have a little bit of gold in our portfolio. We had more. We the market dictated that we take some profits. We did. And gold has just worked its way down, down, down. Recording on Monday the worst day in over 30 years of recorded time, down over 9% in one day. And this leaves a lot of questions and discussions. We know that that big drop was started over the weekend, long before the Boston issue was even on the radar. But all of this kind of came together to just create a really bad day for gold. As Wednesday, it started down again so far. So we're going to have to see how it ends up shaking out. Clearly some challenges for gold bugs. Y'all know Adam likes to say everybody believes they can be the first one out of a burning house. When you see an asset price start to rise, people start to buy it. GLD, the exchange traded fund, has had a lot of money pile into it. And then you've got all sorts of stories of mass inflation because of things that Bernanke's doing that's driven people to buy gold. And when prices go up, it is very easy to justify beliefs that you want to have. And so we saw more and more people pile in it. Obviously, when they tried to get out, the house was on fire, and some of them just didn't make it to the door. And you know the rule. Pigs get fat, hogs get slaughtered. It's very, very simple. We want to take profits off things when we can that make sense. Make sure that we're in the right areas, but not be silly. Like I said, Thursday night, we do have the Spring Thirdly coming up in Anderson. In a couple of weeks, we have the one in Lafayette. If you're unable to come, that's fine. We'll send an update like this. It won't be as long as the Thirdly, obviously, and there won't be free food, but you at least get an idea of some of the things that are going on. Very, very interesting first quarter, things that we need to talk about going forward for certain. If you're out and about on Saturday, don't forget to catch the radio show. Had some interesting conversations there this morning. But Saturday morning, 9 to 10 on WQME. And you can listen to WQME on the internet live if you would like to as well at WQME.com. And of course, we're also going to be on Shine 99 on Sunday mornings from 10 to 11. And the newspaper column, of course, live on our website, yourlifeafterwork.com. You can find it. Folks, thanks for the faith, the support, the friendship. We look forward to seeing as many of you as we can on Thursday. And I look forward to seeing the rest of you in the office or at least over phone calls coming up in the very near future. God bless. Have a great week. We'll see you again soon.